Hello, good morning. It's Monday the 31st. I'm FX Blue and we'll try and skip through this one pretty quickly because it started raining. I don't have a brolly. Right, so the MPC will be on this week since they were forced to accept that inflation was unlikely to return to the 2% target without changes to monetary policy. This has become their number one priority. Governor Andrew Bailey, remember he was on team transitory from the start, believing that rising inflation would return to normal once issues with the supply chain bottlenecks work themselves out. But issues like the continued rise in the wholesale gas price and the global shortage of microchips have been external contributors to rising inflation. So the MPC will have a decision to make. Another rate hike remains likely on Thursday, which will be the first time in 18 years that the Bank of England has raised rates at consecutive meetings. However, there are various headwinds growing that could easily blow the recovery off course, so they may sit on their hands for another month. Boris and Sunak were on at the weekend. Despite those rumours that Johnson had been pressuring Sunak to delay as part of his survival strategy, they both popped up to confirm that national insurance will increase, and those increases will come into play in April as per Sunak's budget. Expect a big week for Boris. His future should be decided this week as the Cabinet Office report on those various parties at number 10 is expected to be released. So by the time the MPC decision is out on Thursday, we could very well be looking for a new Prime Minister. In the market, sterling suffered against a strengthening dollar last week. We traded down to about 133.55. Held up much better against the euro though. We touched 120.40 there. We opened this morning around 134.25 against the dollar and 120.25 against the euro. Over in the US, the Fed is also ramping up its fight against inflation as that microchip shortage is a key challenge for the US economy. Only time will tell if Powell stayed on team transitory for too long, but the fear was that earlier Fed action could have cut off the recovery before it really got going. Nevertheless, last week, the Fed came close to guaranteeing a rate hike at the next meeting. That's in the diary for March 15th. And this has shifted the discussion towards whether we'll see a 25 basis point or even a 50 basis point hike. 50 basis points would virtually confirm the dollar as a strong one-way bet, but that would be a pretty punchy start to their rate tightening cycle. This Friday will be the first Friday of February. That means non-farm payrolls will be released. Early predictions for the headline number are around 200,000 new jobs. That's a fairly conservative estimate given what was expected each month through Q4. So maybe those data junkies have committed to new year, new me. Last week, the dollar index hit a new high of 97.45 and euro dollar starts the new week from around 111.65. Right, that's it from me. I'm going to make a dash for the dry. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.